Hey YouTube, what's going on? Chris here. Wanted to bring you all an update on Litecoin. Right now it is at $79.35. We're up 0.15%. There's some important things that are taking place that we were talking about last night. Now we're going to see a little bit more of it form today, and I wanted to dive into that with you. And it's that Doji candle that we're looking at right now. And what I'm going to do, I know a few people have said, I'll talk about different candlestick patterns and things like that, and they don't really understand them. So I'm going to try to go through a Doji here really quick, guys. And this is from my Candlestick Charting Explained Timeless Techniques for Trading Stocks and Futures. It's by Gregory L. Morris, and this is just a quick little snippet about what a Doji is, what it represents. And guys, even for people who've studied these for a long time, this is really good information out of this book. I just keep going through it. You can't learn enough about these candlestick patterns, candlesticks alone, one stick candlesticks, all that different type of stuff. So that's what I'm going to go over here, and we're also going to be paying attention to these tweezer bottoms that are being put in at the moment right now. And remember, guys, this market here will not close roughly for about another 4 or 5 hours or so where I'm at. So there's still going to be some time to move in this chart to where this Doji candle, what we're talking about right here, could look completely different in the next 4 or 5 hours. So I just want to bring that to your attention. But what my book says here, it says Dojis: when the body of a candle line is so small that the open and the closing prices are equal, they are called Dojis. A doji occurs when the open and the close for the day are the same, or certainly very close to being the same. The lengths of the shadows can vary. The perfect doji day has the same open and the same closing price. However, there is some interpretation that must be considered. Requiring that the open and the close be exactly equal would put too much of a constraint on the data, and there would be not many dojis. If the difference between the open and the close prices is within a few ticks, it is more than satisfactory. Determining a doji day is similar to the method used for identifying a long day. There are no rigid rules, only guidelines. Just like the long day, it depends upon previous prices. If the previous days were mostly doji, then the doji day is not that important. If the doji occurs alone, it's a signal that there is indecision and it must not be ignored. In almost all cases, a doji by itself would not be significant enough to forecast a change in the trend of prices, only a warning of impending trend change. A doji preceded by a long white day in an uptrend would be meaningful. This particular combination of days is referred to as a bearish doji star. So that would be at the top, guys. An uptrend that all of the sudden ceases to continue would be cause for concern. A doji means that there is uncertainty and indecision in the market. According to Neeson, dojis tend to be better at indicating a change of trend when they occur at tops instead of at bottoms. This is related to the fact that for an uptrend to continue, new buying must be present. A downtrend can continue unabated. It is interesting to note that the doji also means goof or bungle. So, guys, with this candle here, like he was just talking about, so at the bottoms it's not as significant as when it's at the top. At the top, so say at this uptrend here, when you start to see dojis, which we kind of had one right here, I'll zoom in just to show you an example here, and this is what we were looking at for a while. So this definitely would be considered a doji, this candle right here. And we had this doji candle, and then we had confirmation on the next day with a lower close, and that's when we got pushed to the downside. You can even see this shooting star candle. We tried to get back up again, and we could not get up above it. So we ended up wicking down to this 20 EMA, which we have respected since February 7th. It has been good support. We've gotten bounces off it, and right now we have 2 wicks. So these are basically tweezer bottoms at this time right now. We're at 2:40 p.m. Eastern time right now, and we have these 2 little wicks down here, which basically are those tweezer bottoms, and then we're looking at this doji candle. So potentially, guys, this could be a spot that we do get a bounce off of, but what we would need to see is this close as a doji or turn into some type of hammer candle, and then we would want to see continuation or follow through with a very nice white long day candle, maybe something with this on some volume. So you want to see follow through, because remember what he said at the bottom. So how we fell here at the bottoms, this is not as powerful as it is at the top, because right now this basically could be a doji here today, and then we start rolling back over tomorrow, and we'll start looking down at this 0.236 Fibonacci, and this 0.5 Fibonacci is what I'm going to be looking for. But it is significant that at both spots here we wicked down below this 20 and we were bought up. So I want you to put that on your radar, but it wasn't bought up on a ton of volume so far, at least today. We have not seen just massive volume. What we would want to see out of this doji would be some type of volume like this. And guys, whenever you see a doji, say at the bottom or the top, and it's on a lot of volume as well, that's even more significant. Just like this down here. I want to point this out to you before I forget. So let me throw the Fibonacci off here and take a look at this doji candle. So I want you to start identifying these things. It was either in Litecoin or Bitcoin. I'll have to take a look here. It may have been in Bitcoin. Okay, so this candle right here, it has a little bit more body. We'd probably call it like one of those short day bodies candles. So it'd be a short day candle here. And then we started to get that follow through though. But a lot of the times you'll see dojis or whatnot down here on a good amount of volume, which for how small this day was, we did have some decent volume that came in. So almost like a spinning top candle. So between like short day, spinning top candle, that type of stuff. But dojis, guys, can be very, very powerful. But like we learned today in the book, even more powerful at the top. And also when you start seeing all these wicks, guys, that's a lot of profit taking by professional traders. And that's another sign that you may start heading to the downside a little bit. So overall today, I want to do maybe one more video if I'm able to today, guys, the close of Litecoin. I want to see where this closes. But right now, this is a textbook doji right here. Textbook. So what we have to do now, we have to wait and we have to pay attention. We have to wait for confirmation because this here is that fight, that indecision between the bulls and the bears. Picture it right now, all right? And this is how we're going to look at it. So right now the bulls are trying to push it up. They pushed it up to this point, then they got rejected. And you see that the bears tried to push it down past this 20 EMA all the way down to about that 75.46. Before the bulls started pushing it back up, and right now they're just fighting back and forth, and that's that doji candle indecision. So never base it off just that doji and say, oh, well, I'm seeing tweezer bottoms, I'm seeing this doji candle here. You have to wait for confirmation. That's what the book will say. If you dig into more of those chapters, it'll say that confirmation is needed because that's a one candlestick line here, reversal, and you really want to have that confirmation to see. So targets to the upside now. If we had targets to the upside, say we have some type of confirmation tomorrow and we start moving, I would go off the real bodies and I'd want to see us get over this $88.41. If we get above that, guys, then we'd be looking at these real bodies around that 92 and then up to 100. So those are my upside targets. Downside targets, we would be looking at this Fibonacci level, this 0.382, which I'll throw this back on so you can see here. All right, and all my books say these are typical areas for bounces. You'll look at this 0.382, then you'll look at this 50 right there, which is also coinciding with the 50 moving average. So that could be a really hot spot right there. And also this overhead resistance that we had for quite a while that was back over here, we want to turn that into support. So that would make sense if we consolidated above that, but we'll have to see if we get down to that area or if we'll get a bounce off this 0.382 or if we're just going to continue to move up from this 20, guys, and we'll have to start playing that 20 consistently. Just like on the downside, people would play that. Whenever it hit it, they would short it. Now what we're looking at to see is if every time we come down here, are people going to be longing it? And I don't have enough data yet. Yes, we've seen it back here. We've seen it at this point. We've seen it here. We've seen it here. We've seen it here. And then here we kind of gapped away and floated away from it. So, you know, that's something that I'm paying attention to. And I'm also writing stuff down on this, guys. Just like this pump. So this was like that one-day pump. I counted how many days this took to start to roll over. So I know next time when I see a big candle like this, I can say, oh, you know, last time it was about 5 or 6 days that the pump continued up. And then you need to take your profit. And every time it's going to be different. But these can give you clues into it. You know, how long could this go up? Because a lot of guys jumped in right here after they saw this candle and said, oh, I'm probably going to get in a short because most likely this is a false breakout or a false pump and we're going to start falling back down. So I'm sure people got caught right here when they continuously pushed over on this price where we kept going up, especially if they were over leveraged. This wick most likely got them here and they could have been liquidated. And that's why you never want to over leverage yourself if you're trading, guys. Be very conservative. All right. So those are the things that I can give you right now, guys. I'm hoping to be able to get a video out tonight at about 8 o'clock when it does close. If I'm not able to, I apologize. Got a lot of stuff going on with my other business, life in general. So I'll try to do my best, but pay very close attention to the close today and then see if we have any follow through to the upside or the downside tomorrow. That's the best advice I can give you. And remember, patience. Don't ever chase coins. Guys, don't ever chase coins. Have patience. A lot of the time the market will come back to where you were thinking it was going to come back, and sometimes it'll even go back even farther. So, just have patience. You can always get it another day. There's always another trade. There's always another coin. There's always another time. Don't beat yourself up. And also for the people who beat themselves up about, hey, I got Litecoin at $60 and I ended up selling off at $75 and it went up to $100. Guys, if you made a profit, be proud of yourself. You locked in that profit. Bulls make money. Bears make money. Pigs, greedy people get slaughtered. And that's what all my books say. So don't be greedy. When it's a good profit, lock it in, be comfortable, or at least put that break-even stop to where you can protect yourself and say, hey, I'm going to let this ride, and at worst, I'll break even, cover my fees or whatever, and I'll move on to the next one. But at best, you really could have something that could run hard. There were some people who shorted the top of Bitcoin who did not close until about 3 or 4 months ago, and they wrote it down for however long, a year, 12 months, whatever, until their contract expired. So, guys, you got to really let some of the good ones run. That's what I can tell you. But don't ever be upset with yourself. Or if you mess up on a trade, guys, learn from where you messed up. We're all going to mess up in trades, me included. Everybody's going to mess up in trades, or the market's going to move against you. But that's why we have those things in place. But write it down, learn from it, and if you learn something from it, just like I'm learning from this pump here, how long it can take to the area when we may start to roll over, we can start really writing these things down and learning these things for the next time that they occur. We'll be ready. So remember, a lot of this stuff repeats itself. History repeats itself in a lot of ways. So, keep in mind, guys, that it can repeat itself, especially like how we got out of the bear market the last time. Litecoin was what let us out of it, and we're moving in that direction now. We're still in that intermediate term uptrend, so we want to see a nice higher low put in down in here, guys. So if you like what we do here, like, subscribe, hit that notification bell. I'll keep trying to get them to you the best that I can. Happy Friday to you. Take care.